analysts at Goldman Sachs predict the Federal Reserve to start cutting interest rates by the end of next June.
Exactly. Now, this is with a moderate quarterly pace of decreases from that point. A Bloomberg report showed that Goldman Sachs Group forecasts the U.S. Fed rate reduction to start in the second quarter of 2024. The Federal Open Market Committee, FOMC, which sets interest rates, is widely likely to hold off on raising rates in December. The headline rate of inflation in the United States was 3.2% last week, which was lower than predicted. However, the core consumer price index, which excludes volatile food and energy prices, was rising at a rate of 4.7%.
Now, Jan Hatzius and David Maris wrote a research note, and I'm quoting here, "The cuts in our forecast are driven by this desire to normalize the funds rate from a restrictive level once inflation is closer to the target." According to the banking giant, the Fed, at its next meeting, it is expected to say that the core inflation trend that has slowed enough to make a final hike unnecessary. In March last year, the Fed started raising its benchmark rate from near zero. It has aggressively raised it to the range of 5.25% and 5.5% range. Goldman Sachs economists now predict that rates have peaked in the United States. They expect the Fed to lower the Fed funds rate to 3% to 3.25 range after they start next year.
Now, Jan Hatzius and David Merkel added, and I quote here, "We are penciling in 25 basis points of cuts per quarter, but are uncertain about the pace."